Well, holy smokes, it is official. The Federal Reserve rate cuts have begun. Expect to get some emails in your bank account suggesting, hey, it's your banker. Your savings rate is now down by 0.5 percentage point. Now, Jerome Powell calls this a recalibrating of policy. And one of the things he left off with is suggesting that he sees no indication that we are presently in a recession, at the same time as he also suggests we're not willing to declare victory and we are not declaring victory on inflation. But both of these, in my opinion, are straight up lies. I think that the Federal Reserve is declaring victory on inflation. I'll show you that on the summary of economic projections in just a moment. Not only do I think the Federal Reserve is declaring victory on inflation, but I think the Federal Reserve realizes if they came up in front of a nationwide audience and said, yeah, there's some recession risks, you would see the market so quickly sell off that you would literally create the very recession you are trying to avoid. This is why, of course, Jerome Powell says, quote, I don't see anything in the economy that suggests the likelihood of a downturn is elevated. We don't see that. You see growth at a solid rate. You see the market very solid. I don't really see that. That was his line on recession. But wait a minute. Let's take a look at the summary of economic projections. Does that align with what your staff is thinking? Because see, in this summary of economic projections, what I've done is I've compared the March 2024 estimates y'all gave to the current estimates for next year. And in March of 2024, we had a low estimate for the 2025 GDP of 1.9%. Right now, that low estimate has moved to 1.3%. Note, that's the range, right? They expect it'll be average around 2%. But someone at the Fed thinks it could go as low as 1.3. The lowest low estimate was 1.9. Now it's 1.3. The Fed sees the weakening in GDP. Notice Jerome Powell did not once suggest, the Atlanta Fed real GDP says GDP is growing at 3%. Why wouldn't he mention that? He doesn't mention that because that is extremely misleading and would send a signal that they're blind. Instead, he says, GDP is progressing at roughly the similar pace now as it was at the beginning of the year at about a 2.2 percentage point pace. Interesting. So if GDP is expanding at 2.2% and you think there's this downside risk, we could go potentially, somebody at the committee thinks we could go as low as 1.3, which again, the previous low was 1.9. And the previous low for the unemployment rate was 4.2, and now it's 4.7 the previous high estimate was 4.2 for 25, and now it's 4.7. It kind of suggests that there's some folks over at the Fed that are going, no, things are weakening more than we expected. And Jerome Powell did indicate that in this meeting as well. He tells us very clearly, hey, the jobs market has started to weaken substantially, especially when we look at job openings. Now, Jerome Powell is trying to put a floor under that. Think about kind of like a line on a chart plummeting, and he's trying to put like a support underneath, like on a stock. It's like, okay, how can we stop the collapse? That's why we got a 50 basis point cut today. They're trying to put a floor under that labor market slowdown. But it actually makes me nervous, and I'm going to give you my predictions for what I think is going on. And I'll show you what my predictions were going into this, and we'll check those. But first, in honor of being right on a 50 basis point cut, I told my team we would not do this unless I was right on 50 basis points. We went from having no coupon to having a Fed 50 coupon. So in honor of being right for being basically one of the few to suggest 50 basis points, 9 out of 115 Bloomberg economists thought we were going to get a 50 basis point cut. We got a 50. A lot of people were like, you're crazy thinking 25. Anyway, I was thinking 50. People thought I was crazy for thinking 50. We got 50. And so we did a flash sale. It'll expire tomorrow at lunchtime. It's kind of a weird time for it to expire, but 24 hours basically. Fed 50, go to meetkevin.com. You get lifetime access for life to all my trades, including my $2.5 million in call options, other allocations that I'm making, where my head is on real estate, the real estate market, the stock market, future Fed meetings. It's not like you're just buying now to see, okay, what's Kevin doing right now? You get that lifetime access. So consider that by going to meetkevin.com. But let's compare some of the other things that were said. First of all, we have the following. My predictions going into this were that we were going to get a 50 basis point cut. We got that. We are not currently in recession. We got that. that. And of course, the Fed wants to be vigilant and that rates are sufficiently restrictive. We got that. The Federal Reserve did project a higher terminal rate than I expected, 4.4. I was looking for 4. And profit taking ensues. We'll have to really see how things move over the next couple days to see how profit taking ensues. So far, it seems like there was some profit taking, but we're trying to get back to that 476 line on the NASDAQ 100. So we'll see where that goes. Now, something I want to point out to you is over here on the FOMC statement. Look at this. Right here, they projected a 4.4 at the end of the year, which is a substantially greater set of rate cuts than what we had in the last FOMC projection. And if we jump to that last projection, you can see that I wrote here, if we get less than a 4.6, we're going to get a 50. And that's exactly what we got here. We got a 50 basis point cut because I think the Federal Reserve is starting to recognize there is weakening, but we don't want to panic anybody. So we're going to have a hawkish conference, right? We go 50, have a hawkish conference. The economy is fine. No recession. Everything's fine. He literally said the economy is fine. Those were quoted. I saw it even pop up on terminals. People were like, Powell, U.S. economy is fine. And it kind of just reminds me of like that cartoon meme where, you know, the guy's sitting there with the coffee. Everything is fine and everything is on fire right behind him. Consider for a moment why they ended up cutting 50. They not only used the incoming payrolls data and suggested that maybe had they had this data earlier, they would have actually cut 25 in July. But they also said they're starting to see anecdotal warnings in the beige book of weakening in the various different bank sectors throughout the United States. That is Fed member bank sectors. And that's why they cut 50. They're trying to, they don't think they're behind. They don't want to fall behind, but they also acknowledge that they're not in a rush to get this done, that they're going to remain data dependent. This is not surprising. But listen to this. All 19 members at the Federal Reserve who were part of this decision, 12 of them vote, but 19 are part of it. All of them part of the summary of economic projections. All 19 wrote down multiple rate cuts for this year. Just in the last summary of economic projections, very few were writing in multiple. In fact, there was a talk that we would only end up getting one rate cut this year. 17 officials wrote down 3 or more cuts. 10 out of 19, so more than half, wrote down 4 or more cuts. Jerome Powell says the economy is in good shape and the labor market is in a solid position. He does actually compare the labor market. I was worried they were going to do this as a way of being hawkish, and they did. We warned about this in the days before, and they pulled it out of the bag. I was worried they were going to say, well, you know, historically, 4.2% unemployment is really low. That's bad. You don't want Powell going, oh, well, 4.2 is historically low, because it potentially means they're willing to be a little bit more cavalier with that jobs market because it seems like it's in a good place. But once the economy starts slowing, it's an inertial movement that's hard to stop. This is why Powell was asked, hey, usually when the unemployment rate goes up 1%, it proceeds to go on yet another 1 to 2 percentage points after that. Isn't that bad? And Powell says, well, that's why we're going 50 to try to stop it now. So he recognizes the trend is down on unemployment. They're trying to stop it with 50. But in the same conference, he also said, well, you know, we're not political because after all, there's a lag in, you know, how long it takes for rate cuts to hit the economy. Okay, cool. So the federal, unemployment rate is at a level where you want it now, but your rate cuts are going to lag to help the unemployment rate. So in other words, the unemployment rate might actually weaken further, might rise further before your rate cuts even take effect. Jerome Powell basically declares victory by suggesting that our patience has paid dividends. The base case is getting to a more neutral level. They're right now pricing in rate cuts of about 200 basis points would take us to about 3.25% into the end of 2025 through this easing cycle. That is a little bit less than what markets were anticipating. So you are getting a little bit of a take profit in some stocks, and you're getting a little bit of a take profit in some bonds. But it's probably not going to take a lot of thinking or data to indicate that the economy's still slowing, and all of a sudden you'll actually see rates move slower. It's my estimate or my guess. Now, if we actually look at the world interest rate probability move after this, I can tell you that right now, markets are actually pricing in a 35% chance of a 50 basis point cut in November. So look at that. We're already moving to that forward data. Something else to pay attention to are the next data sets, which Jerome Powell pointed out as well. October 4th, we're going to get a jobs report. Mark that on your calendar. October 4th, jobs report. October 10th, we'll get a CPI report. I'll cover all of these live. November 1st, we'll get a jobs report. November 13th, we'll get a CPI report, which is after the election, after November 13th. I personally expect a lot of volatility between now and the election because now, as we suspected, the Federal Reserve doesn't actually provide really clear clarity. And instead, now all of a sudden, you're basically declaring victory on inflation, but you think your lagging rate cut is going to help the labor market. It's going to make us more data dependent. So what are we going to look at? Q3 earnings in October and the jobs and CPI reports. That uncertainty could increase the risk of more profit taking. As far as housing, Jerome Powell says that housing inflation has been dragging a bit based on the owner's equivalent rent sector. This is something we expected as well. But as long as market rents remain in control, the outcome is not in doubt. Basically, he's saying, look, market rents are essentially flat. We've looked at this as well. Housing rents are a lagging indicator as part of CPI, and that's one of the last parts that's hot. So he's basically declaring victory on inflation here. And he does argue that as rates normalize, more people will sell, and that'll normalize the housing market. This is an argument that I had as well. I haven't been saying that I think housing markets are going to skyrocket just because rates come down, mostly because I think inventory will come up on that. And we've already seen mortgage rates come down quite a bit here. So you really have to watch the 10-year Treasury to see if mortgage rates are going to come down even more after this cut. So far, yields are actually slightly up. Yields are slightly up at the moment, probably for a few reasons. Number one, profit taking, very, very high likelihood, just because we had such a good run going into the Fed meeting for bonds. But the second thing is they did mention that they have no intentions right now of a slowing QT, quantitative tightening. So that could be another reason as well. Worth noting that gold went from being up one and about 2%, 1.2% to about down 0.37%. So you've had a little bit of an unwind there of some of maybe the recessionary fears. And this was part of sort of my bingo card, which I didn't get bingo again, but we had it seems like I'm always off by like one on the bingo card. I'll show you the bingo card really quick if you want to see what I got. But on the bingo card, I did mention that ending QT talk comes up. I got, a mark on that. He's hawkish in discussing, in his discussion by suggesting the economy is strong now. We got that. Yep. We got can cut more if data deteriorates further. Yep. Powell's on time, purple tie, Nick T sat next to the blondie, meeting by meeting, no decision yet on November, risks to the downside in labor, don't consider politics, owner's equivalent rent lags, but market rents are good, we wrote that down. We didn't get anything on a self-sustaining labor market, although he was roughly asked that. He used the laptop instead of paper. He didn't say we're still sufficiently restrictive, though that was implied that November could be zero, but we're pricing in a 33% chance of 50 and pretty much a certainty of 25, mostly because of the summary of economic projections. SOM rule didn't come up, little typo there. Data dependent is sort of by default something they always mention. I'm sure that was said, but it wouldn't make a difference to my bingo card anyway. Okay, then what else we have? So let's see here. I just want to make sure I got all my notes covered because there's a lot here. So we got the 50, which was great. We got job gains have slowed. That was the change in the statement. Strength in the labor market can be maintained and the economy can continue to grow with modest growth. So they're basically trying to draw this picture of a soft landing, which is, hey, like things are softening, but, we could probably keep going with this softer pace and be okay absent a recession. Again, I think they have to say that. Because, frankly, if you say you're going to go into recession, they will induce a recession immediately. Let's see. Generally expect GDP to remain solid. Notable step down in the labor market. Labor market is not a source of elevated inflation. Our patient approach has paid dividends. Basically, again, declaring victory on their approach here. Economy is in good shape. this is that hawkish talk of basically like everything's okay, this is fine. Watching the labor market further, though, we don't need any further labor market weakening, he reiterates. And the economy is basically fine. Again, I think of that meme. And then again, refuses to acknowledge that maybe the odds of a downturn or recession have increased. Again, I dispute that. I agree with that. But that's the cool thing about markets is that everybody can have their own opinions. What matters right now is that we got 50. That actually does reduce the odds of a recession, but it's lagging. The question now is, has the Fed waited too long at this point? And quite frankly, volatility in markets and data over the next probably 4 to 5 months, maybe 6 months, will really let us know, are we going to stick a soft landing here or are we going to go for a hard landing? Too early to tell right now. Either way, whatever happens, make sure that you're a member over at meetkevin.com. Join me at meetkevin.com. Shout out to those of you joining using that 24-hour flash sale. You get to see my 24-hour or my trades on Fed 50. Thank you so much for joining. Chad, Gesson, Herdonley, Wesley, Joshua, Timothy. Thanks so much for joining here. Appreciate all of you for the support. Remember, you get lifetime access to these. Can't guarantee I'm always going to be right. I can basically guarantee you I'm not always going to be right. No idea how the market's going to move in the very, very short term. But I think we've got a nice handle on how we build out positions for the longer term macro moves. So feel free to join us in the course member live streams to see those analyses. Let me know what you think. Were you expecting a 50? Only 9 out of 115 economists surveyed by Bloomberg were expecting a 50. Nailed the 50 bet. Now the question is, what are markets going to do? They're pretty stable right now. And so the question is, what happens over the next few days? What do we price in for that November meeting? And what do we have to look forward to for the rest of this week? Not much. Not a lot of data at all this week. We don't really get PMIs until next week. We'll get initial jobless claims tomorrow, but who cares? And that's all I got. So go to meetkevin.com, use that Fed50 coupon code. If you want actual financial advice, by the way, do check out stockhack.com. I just want to give you a warning. It's going to take some time to onboard everyone just because so many people have signed up to the interest list already. We're probably going to go in order of people who have signed up. Expect this website to be updated within the next day or two with a larger table on everything that's included. It's not the cheapest service, but we want it to be the best service. I'm going to put up a new video. We're going to put a lot more detail in here on everything that's included. It's going to be pretty amazing. We think our asset management fees are actually very reasonable at 69 bips. We do have a monthly fee, but that's because we're not going to charge hourly. A lot of financial advisors will charge hourly. And one of the big things that makes us different, people ask what makes you different, is that we're actually going to be able to help advise you on real estate. I don't think, I'm biased, obviously, but my opinion is I know a lot about real estate and I'm so willing to help people on real estate. And I just don't see advisors in the financial advisory space talk about real estate, usually because, I hate to say it, but there are no commissions in real estate for advisors. So there's really no incentive. But we're a commission-free model. We don't charge an hourly fee. And we can help you with renovations, real estate acquisitions, retirement, stocks, crypto, insurance, bonds, you name it, crypto management, you name it. So we're really excited about this. So sign up on the wait list. It's coming October 1st. But again, we're going to phase in probably in the order at which people signed up on the wait list, how we can actually onboard you. Since onboarding is the most time-intensive part, and then working with you regularly, texting with you, calling with you, emailing with you. You want to blue text your financial advisor, we have that opportunity for you. So you'll be working directly with my team, who's always a radio call away from me. That's the other thing. I'm either in the office with the team or I'm a radio call away. Hopefully it doesn't like Israel blow up on me. I got quite a few devices here, and it's just so I can always be in touch with my team. So that way, no matter what questions come up at any business, whether it's house hack or stock hack or whatever, I'm engaged, man. My team can get a hold of Kevin. I got the phone, we got the radios. I could have like 3 bombs here right now. This is all for you. Look, I'm risking my life putting radios in my face for you. So see this one? This one's really cool, by the way. This one. This is an LTE radio, which is cool because I can take it around. This one right here with the giant antenna, encrypted local network. Mwahahaha. It doesn't go over anybody else's network. It's my own antenna because we built an antenna in, and so we have our own. Anyway, only radio geeks probably care about that. I care about that. I think it's really cool. Anyway, thank you so much, seriously, for being here, folks. I love all of y'all. I'll keep bringing information to y'all. Let's see what happens in markets. The Qs did just turn red. Again, I personally think the level of uncertainty increase that we're going to get between now and, frankly, the election is going to be massive. I mean, think about it. You just got the best news you could have. You just got the 50, okay? So you got good news for the markets. Now everybody's like, cool, I'm going to take profits. And now you go into a low liquidity time with Q3 earnings coming up, 2 jobs reports coming up before the election, 2 jobs reports before the election, low liquidity as we go into earnings, stock buyback blackouts, and people that are kind of like, I don't know, was the Fed too late? Or are they seeing something we're not seeing it? I mean, read the Fed Beige Book. The Fed Beige Book freaked them out and made them go for a 50 BP cut here. Fed Beige Book was, what was it? 9 out of 12 districts we're seeing signs of weakening. That's anecdotal, right? Those are leading indicators. So I don't think it's all Gucci out there. I think the Fed is doing the right thing by going 50. So I probably on the bear bull scale, for those of you wondering, I said that 50 would be more bullish. I did kind of anticipate 50. So I went to 3.5 on the bear bull scale. I'm probably at like 3.6 right now, but it's not where I'm like so excited about where valuations are in markets and where I am. But yeah, I mean, like, do I smidge up a little bit because of this on the bear bull scale? Fine, but 3.6 is certainly not making me want to run into stocks going like uber bullish all in on margin right now. That recession risk is still very, very present. And I think it becomes substantially more evident and prominent over really the next 4 months here, especially January, like a January layoff period. If you get a bad October, January layoffs could be bad. So, those are just little things to watch for. So on bear bull scale, 3.6. So that's my take. Anyway, if you don't already know, by the way, you could watch totally for free my market open live streams every day the market is open over at the Meet Kevin live channel, Meet Kevin Market live channel on YouTube or on X. You can follow me on Instagram at RealMeetKevin, and that's all I got. So meetkevin.com, 24-hour flash sale on the Stocks and Psych group and the other courses if you want to bundle up. If you have questions, staff at meetkevin.com, stockhack.com. Get in line for the financial advice if you're interested in that. And good luck, everybody. I really do appreciate all your support. I couldn't be here without you. And all I can promise is that every single day, I'm going to do my best to just keep working hard for you, even if I F up. So appreciate y'all. Thanks, folks. Goodbye.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
Even though I'm a licensed financial advisor, licensed real estate broker, and becoming a stockbroker, this video is not personalized advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show shall not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purposes of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services we may benefit from. I also personally operate an actively managed ETF. I may personally hold or otherwise hold long or short positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuer other than HouseHack, nor am I presently acting as a market maker. Make sure if you're considering investing in HouseHack to always read the PPM at househack.com.